Reserve did not hike rates in the U.S. Wednesday, but the earnings parade did not stop this week as hundreds more reported. I'm talking to JJ Kinahan, Chief Strategist, TD Ameritrade, via Skype today. So JJ, hello.
Well, hello, MaryAnn. Great to be here. Thank you.
What was the most significant statement you saw from the Fed statement yesterday?
Well, I think that the Fed, two things. They wanted to see us see better numbers, and they weren't really specific about that, but they wanted to see continued growth. My sense is that we've seen very good job numbers. We've seen very good housing numbers. What's been lacking has been the consumer, retail sales, durable goods. So we really want to keep our eyes on those numbers. And the other thing they said is that they'd like to see some hints of inflation first. So what that really is going to draw everyone's eye to is the next employment report to see what happens with hourly earnings. So that will become, in my opinion, a more important part of the employment report than perhaps it's been.
And we got a little bit better GDP numbers in the U.S. This morning.
Yeah, we got good GDP numbers at 2.3%. So what it does show is that last month's negative number was actually an anomaly. The nice thing was they also revised last month's number to a positive number of 0.6%. Still not the growth you'd like to see, but again, it makes last month an anomaly. So everything seems to be on pace, and I think it's a big sigh of relief for everyone in the U.S. to see that the economy continues to improve.
Let's look at U.S. earnings. The season's in full swing right now. We had a slew of earnings. What's your take so far?
Well, a lot of the companies have beat on the bottom line, that is earnings per share. But they beat on such lowered expectations, it's almost like they should get a participation award. Where we really want to see is on the top line in revenue growth, and that's where a lot of companies have actually struggled. We just saw this morning, Colgate-Palmolive, Procter & Gamble, Time Warner, they failed to meet on the top line, some even on the bottom line, and one of the reasons being cited for revenue failure has been the strength of the dollar. It has made it tougher on these multinationals to sell overseas. But overall, we're seeing revenue numbers for many companies failing. And, we just got done talking about GDP. It's very difficult to grow your economy when the companies aren't getting more revenue. You can only cut so many jobs or, delay projects on infrastructure for so long. At some point, we need to see that top line improve for the economy to really, really start humming on every level.
Now, there's been a lot of hype with Facebook and Twitter, but they don't seem to be riding quite as high as they did. What do you see there? Well,
it's interesting. If you watch Twitter when earnings came out, looked great, immediately skyrocketed, and then the CEO came out and, threw some water on the fire, so to speak, talking about the fact that some of their executives had left, that a big portion of what they had in revenue went towards compensation, and that their numbers weren't going to grow as much as expected. Facebook's, on the other hand, I think theirs were more positive because their user base, although it may slow in the future, what they've shown is they can make revenue off social media, and that's been a question about social media for a long, long time, and they are on the right path, in my opinion, in terms of how that's going. The next question for Facebook is, you have one of the greatest databases in the world. How are you going to continue to monetize that?
And energy has been a very difficult ride. What do you see? I know a couple reporting tomorrow.
You have ExxonMobil and Chevron Texaco tomorrow morning before the opening. I think a lot of their expectations have certainly been lowered, and the primary reason being, as I don't have to tell all the folks watching here, the price of oil coming down so significantly has had a big effect on them. It is interesting, over the last few days, we have seen some buyers of the calls or of the stock. One of the reasons, in my opinion, being many people will buy those stocks to synthetically play the price of oil without having to go out and buy the future itself. So we'll see if those folks are right. But overall, what will be interesting to see is what they say in terms of future growth. That's an earnings call that will be very, very important. I think it's baked into the market that those numbers may be a bit unimpressive, so to speak. But what the CEO says for future growth, for future drilling opportunities, I think is really what's going to sort of set those stocks tomorrow morning on their path one way or the other.
Anything else on your radar screen?
Well, it's interesting. We saw the S&P 500 falter. We had 5 days in a row where it went down. Last few days, it's been very, very healthy. If you look at what's really going on, the 2064 level on the SPX or the S&P 500 cash is a 200-day moving average. We went down and tested it and bounced immediately back up. Since April 7th, we've seen the S&P 500 trade between 2064 and 2135 every day but 10. And 8 of those 10 were in a row. So really what we're saying is we have low end of the range and high end of the range for things that are happening overall. So we'll have to continue to see if that's the case.
And what trading strategies are you looking at right now in this kind of an environment?
Well, we're in a we're in a volatility environment that also seems to be staying in a range. If you look at the VIX, 12 seems to be the area where we get a lot of support, and up in the mid-15s we get a lot of resistance. So for those who are more advanced in trade volatilities, those are nice ways to trade it. Overall, I think the trend is your friend. So those who are trading stocks, as we get to the low end of the S&P 500 range, maybe is a time to buy some of the stocks that you like. And as we get up, don't be afraid to take some profits. The biggest thing I could give to those watching right now is when volatility moves around like this, when the market's moving in a range, you stay with smaller positions and stay nimble. Don't be afraid to take some profits near the top of the range. Don't be afraid to add small to your position at the bottom of the range. But at least, rather than saying there's not much I can do, you can trade the range. Again, the biggest thing is you want to stay in a small and nimble fashion so that if we continue downward, if you want to buy more, you still have some dry powder. If we continue higher, that you have some other things you can sell if you want to take some profits.
All right. Thank you very much, JJ.
Always a pleasure, MaryAnn. Thank you for having me today.
I've been joined by JJ Kinahan, Chief Strategist, TD Ameritrade. I'm MaryAnn. Thanks for watching.